Hey everyone, it's Evan here from the Trade Risk on Wednesday, December 14th with a midweek market recap video. We are first going to start with the current market environment. We're going to look at some other major markets, sector analysis, and then a few individual names that we're going to run through at the end of the video, but that should be brief. So let's get right into it here. Today is Fed Day, and you can see the S&P 500 SPY ETF. That's the chart you're looking at now, and we did finish lower on the day by about 81 basis points. That's almost 1% to the downside. And it's the first sort of meaningful move lower that we've seen since going back, to late this November when you got a couple of these sell days in here. So let's take a look at where we started the week, where we are now. This was Monday's session right here, this sort of indecisive candle right there. And then we got follow through to the upside yesterday on Tuesday. And then today we broke below the prior day's lows. That's the first little minor sell signal, or at least something to take notice of that we haven't seen in quite some time. So we broke below the previous day's lows and closed below those lows. And you can see we almost broke below the Monday's lows too. We did intraday, couldn't quite close below it. So if you go to the weekly chart, here's the candle that's being printed right now. You can see I tried to get some upside traction to start the week. That reversed today, and we're down here near the lows of the week, minus 0.26. We're effectively flat. But what you can see at least is just a picture in your mind that perhaps this is the start here to maybe a multi-day pullback, or at least a consolidation through time, and it's much needed. Remember, this is a very strong weekly chart here. We've talked about this on the weekend recap. Look at MACD is still rising, making new momentum highs here. That's very encouraging. That's what you want to see there for your longer term supportive time frame. But if we go back to the daily chart, you can see here we have a day one sort of pause, rest, pullback potential in store for us, and now going forward we just want to measure that, see how far that's going to take us, and sort of start to plan our trades and our the names that we're interested in accordingly. Again, still above the 8-period EMA, which is rising, still above the 20-period EMA, which is rising, even though it was almost a 1% down move. Really no technical damage here, a much needed sort of pause here, and that could set up some nice looking charts for us in the future. So that's the way I'm looking at it right now. As we've talked about, we've been posting a lot there, keeping you up to date with some of our latest thoughts, and some of those were what we were doing with our exposure, and we wrote about that yesterday or the day before, saying we've lightened up almost entirely on the long side. Still have a couple of names on, or at least a couple of plays on ETFs, and but much reduced compared to where we were just even last week, or in here when we were building, or throughout the month of November. So we did kind of manage to get out of most of that long exposure into this event. We're looking at this event as either it's just an excuse for volatility. Whatever way the market wanted to go, it would do it, but it was basically an excuse for volatility, excuse to move around the direction we weren't sure of, but it was something we just would like to stay more sidelined and take advantage of the reaction to that move. So that's where we stand right now. Still intermediate term bullish on this market. I see no reason not to be, but in the short term, welcoming a pullback and just planning ideas and trades to get into if this pullback continues for another couple of days. So with that said, let's move into some of the other major markets here. IWM Russell. This is really day 3, day 4. Really day 3 of a pullback consolidation period here. This started a little bit earlier, so last Friday we get this indecisive day here. We pushed up to new highs, and then we kind of closed lower, just in the dead center of that range, and then we followed through to the downside on Monday. Tuesday we did basically nothing. It was just a chop around day, and then we got more follow through today. So IWM, certainly the most stretched index, or the major average here out of the 4, or maybe the Dow is, but certainly one of the most stretched, deserving most of a pullback, and you're starting to see that a bit weaker here, closing below the 8-period EMA. So we do want to keep that in note, and you can see the MACD here is kind of making a lower high here on the MACD. That's interesting. So we're gonna have to keep an eye on this one. We'll see how far this pullback really wants to come back and retrace. That's something that we have on our watch watch. We did get long the IWM. This was a play for us. We were long in here buying, I forget what price exactly, but this is one of the names that we did kind of scale out into these highs over the past few days. We no longer have that position in IWM. Finally, the Qs now suddenly looking fairly constructive here after repeatedly saying that this was the laggard index. Is now holding above these highs here. This Qs look constructive. Go to the composite, right? This is really the NASDAQ composite index we can be looking at. And you can see this is really still just hanging up here well above the 8 period. Did get a bigger bounce off of the lows today. So technology, some of these high beta plays now suddenly starting to come back in favor, seeing a little bit of rotation. We've talked about that on the blog as some trade ideas in recent weeks and days. So that is sort of the lineup here for the major averages. A little bit of short-term weakness here. Let's see how it continues. Not the only thing of interest though. TLT and some of these other commodity plays really sort of interesting today. TLT back to the lows for the year. You can see engulfed yesterday's session. So Tuesday we had this little bit of a gap higher and kind of hold above Monday's levels. And then today we actually engulfed. Actually, we really did engulf the whole week's action here. So the past 2 days, and we're closing on the dead lows for TLT. So another bearish sort of sell signal. This trend has been strong to the downside. We were noting this MACD divergence here, this bullish divergence in MACD and some of those other momentum oscillators. Keep an eye on that. Still hasn't really proved itself through any price action signals yet. As you can see, we're back to lows. Maybe still in the process of forming some type of short-term bottom here or something, but not evidence just yet. Gold, let's go to that next. Really seeing an acceleration lower today. This one again has seen tremendous momentum to the downside ever since the elections, and it hasn't let up. We saw again acceleration today. We don't know if this is some type of capitulatory sort of sell-off move here after such a strong downtrend. You're going to get an accelerated move. Sometimes that marks sort of the ending couple of days or a general area of a trend. Again, speculation, and there's no proof in that, so just be aware of it. Gold again stretched to the downside. Still think it's within the standard 2 and 20 Bollinger Bands when I checked earlier today, but something maybe of interest in silver. Again, noted this outperformance recently. This metal here performing a little bit better than gold. You can see it's off the lows, not making new lows. MACD tried to go positive. It's pretty interesting here, and it's still kind of doing its constructive work to potentially lift itself back to the upside. So keep an eye on that one going forward as well. Getting into oil. So this was a trade that we had on. Remember, we bought this, and I think we bought this the day of the video that we put out. We bought this on this day here, and in fact, we played this pretty aggressively on scaling out. We sold 25% the very next day, sold 25% up here on this day here, sold 25% yesterday, and as you may guess, we sold the rest of it, 25% today. So we took this off in quarters, no longer in this position. It was a nice quick win for us. Was certainly looking constructive to start the week, and it's progressively gotten a little more pessimistic here as it failed to hold these highs yet again. You can see still hanging up in the top end of this range. MACD still pretty constructive, back below the 8. Really, you just want to see it hold in above $11. If you started to lose $11, then you have one kind of nice looking false breakout there. But if you can, put in a higher low here, or at least hold where we held last week, that would, certainly be constructive and potentially get you another retest of these upper levels into next week. Yet to be seen though, no longer in this position, just a spectator. UNG looks pretty interesting today actually. Almost bit the bullet on it, but I'm just going to continue to wait this out. Day 1 Fed, I like to kind of let the dust settle maybe for at least day 2, but strong trend to the upside here in natural gas. Ran right into resistance, the prior October highs here, and then it pulled back accordingly. That's a very nice constructive sort of trade. If it can hold in here above yesterday's lows, you might have something going. You can see it actually did take out yesterday's highs. So UNG looking pretty actionable here. Just going to let it pass for now, see what happens into tomorrow. Might need more time to just kind of shake around down here, but certainly looks interesting. Strong rip to the upside, shallow pullback. Now we just need to see if that pullback is done, or it just needs a little bit more time. So that's the wrap up there on the major markets. Let's take a look at some of the sector analysis. XLF Okay, no surprise here, right? This is the same kind of strength we've seen throughout the past couple of months now, or at least the past month. Carving out a little bit of a consolidation here, flag if you will, at highs. Tried to push up today, failed, came back down to the lows. Much needed digestion period here. It could use, frankly, another week or two moving sideways, and it would still be healthy. So, let's see how that kind of develops. But for now, just give it some time. XLK, this is our one, this is primarily our long exposure here for equities, is in this sector. We own the the XLK outright. We bought this last week, and we continue to hold it after this constructive breakout that we've seen. Down 35 basis points today, but still holding up very well relative to some of these other sectors and to some of the weakness that we saw today. I still like it above the 8. MACD's rising. I like this. I'm here. We own it, and looking for more out of it. Semiconductors, kind of hand in hand with technology, also doing well, sitting up here at highs. Little bit of an interesting, maybe slightly messy pattern here, but it is grinding out new highs there. And finally, this discretionary ETF is still holding up pretty well as well. You can see just kind of basing up here and holding above the 8-period EMA. Looks pretty constructive here. Keep an eye on that if you want to try and play a breakout or some of those underlying stocks. On the downside, we'll throw in XLB just a little bit notably today, the weakness. Obviously, probably a play into some of that Fed speak and what rates are doing and strength of the dollar and all that good stuff that potentially ties into this. But you could see, accelerate a little bit lower, kind of underperformed today. XLB, it's been a strong leader. Once again, another one that certainly can deserve some rest here. So keep an eye on that one if you're looking for a pullback. And then XLU got kind of hammered here. Bearish engulfing day, opened up higher, tried to push higher, failed, and closed all the way down here. So we got a bearish engulfing kind of sell signal within the context of a downtrend, even though it's a recently weakening downtrend. So do that. Take that for what you will in XLU. Now, getting into some of the other, actually, let's just get into individual names here, just a few of them real quick. So Apple, we'll start there, go for some of those big high cap names that everybody likes. Apple, it's been performing well, ended flat on the day, which is pretty constructive. MACD's rising, it's positive. It broke above this level, 112. That's the level we identified as sort of being an important one that you'd want to see taken out if you were bullish. Shows some strength there, and it did. It has, and it's continued to show strength. So Apple looking pretty good. Google also looking good here. Really like Google. Weekly chart is really what I was looking at, and last week's weekly candle was what got me pretty encouraged on this, up 6% and really retesting and thrusting away from that kind of 785, 790 level, these prior highs here, some prior support, just getting back above the 20-period EMA. You can see the MACD held positive. I like this. We got some resistance in here around 825, but very quickly could be back to all-time highs. I wouldn't forget it. One of my favorite there in high beta tech. What else? Amazon, flat, actually ended down today. It's kind of been hanging in here though. It's been quiet, kind of slugging it out. Doesn't really know what to do with itself just yet, but it is trying to grind out some highs here. You got kind of this short-term level. If you're playing things really tight, you'd want to see it at least hold the 760 area, 755, 760, and if it can, then you work yourself back up to this resistance. Needs to take out 790 on the upside to get really constructive. What else do we have? Facebook, still just kind of moving around here, similar to Amazon. We're just kind of waiting a little bit more for some more constructive or enthusiastic price action here. Had a nice day yesterday, didn't do much with it today. You got kind of a double top here from the past 2 days, get above 121, 122. That starts, that could be a nice little squeeze play as it breaks this trend line, breaks that double top. Could be a nice little actionable short-term signal there, especially for day trading. And let's leave it. Actually, we'll go to Twitter next because I know that had a nice move last week. Twitter, I still like it as long as it holds pretty much exactly where it closed. So this cluster of lows here that seems to be important and above sort of where this 8 and 20 are. So it's about $18.75, $19. Needs to hold in here. I think if it can and develop a higher, kind of a higher low off of this igniting move we saw back on December 7th, I think it can still do work against this $20 upside resistance. But we want to see it hold in here. We don't want to see it kind of roll back over and come back down into this old range. That would sort of reset the bar and would just kind of kick the can down the road in Twitter. So it'll be interesting to see how that shakes out and closes on the week. So we will end it there. Hope you guys enjoyed this video. If you haven't yet subscribed, please do so, bottom right hand corner. Thanks so much for watching, and I will talk to you soon.